Why Canoo stock is still sinking. Canoo keeps paddling, but the cash flow is against it. What happened? Last week, shares of the electric vehicle startup sold off after reporting a smaller than expected loss but continued cash burn, despite efforts to raise cash through equity sales and debt offerings. Today, Canoo shares are down once more, 3.4% through 1 p.m. Eastern Time, despite the company just receiving a new buy rating from wealth management firm Alliance Global Partners. So what? Alliance Global initiated coverage of Canoo this morning with a buy rating and a $1.55 price target that implies the analyst thinks Canoo stock will triple in value over the next 12 months. So why aren't investors more excited about the news? After all, according to the analyst, Canoo's growing production capacity and large order book, along with a unique modular design that distinguishes the company from competitors, are all points in its favor. Earlier this month, Canoo confirmed that its order book is worth at least $2.8 billion, representing orders for in excess of 60,000 vehicles. Management expects to have capacity sufficient to build 20,000 Canoo EVs by the end of this year, and 40,000 by the end of next year. Thus, it would appear that the company has a full tank of orders to fulfill, and production capacity sufficient to complete all of the orders it has already collected by the end of 2024. Now what? And yet, as I pointed out earlier this month, Canoo also has some problems. Expanding production capacity is all well and good, and even necessary, in order to fulfill the orders, but it's also costing Canoo a lot of cash. At current run rates, the company is burning through more than $80 million per quarter. But at last report, Canoo had barely $61 million in cash available to it. And right there's the issue. Long term, things look promising for Canoo. Short term, though, Canoo could very well end up running out of money before it's able to make its long-term promise a reality. This, in a nutshell, is Canoo's big problem, and probably a big part of the reason why investors aren't reacting to Canoo's upgrade quite the way Alliance Global was probably hoping they'd react. Should you invest $1,000 in Canoo right now? Before you buy stock in Canoo, consider this. The Motley Fool Stock Advisor analyst team just identified what they believe are the 10 best stocks for investors to buy now, and Canoo wasn't one of them. The 10 stocks that made the cut could produce monster returns in the coming years. Consider when Nvidia made this list on April 15, 2005. If you invested $1,000 at the time of our recommendation, you'd have $425,516. Stock Advisor provides investors with an easy-to-follow blueprint for success, including guidance on building a portfolio, regular updates from analysts, and 2 new stock picks each month. The Stock Advisor service has more than quadrupled the return of S&P 500 since 2002.